there are several motivations to wealth creation. The first one is safety. Safety means that you are looking for a safety net for your family. Majority of people who are looking for a safety net are people who are going to buy a house, invest in a house, save some money in a bank, in a mattress, have some cash laying around because they want the safety of being able to access money fast and have money available to them, or the comfort of not paying rent because they own their own place. Their biggest consideration is the safety that wealth and money creates for them rather than the return on investment. Then the other kind of people who are looking or investing, the other motivation is wealth creation. These are people who are going to look at the return on investment. How much am I making from this money? They're going to look at the cash flow. How much money is coming into my pocket? They're going to look at the tax avoidance or tax advantages. Is this money tax advantage? Do I have less tax that I'm paying to the the government based on what class of investments I am making? That's why there's some people who invest in shares because dividends may be paid much less in terms of taxes as opposed to other forms of investments. So people have different considerations for wealth. So which one is the most important for you? What is important for you is dependent on what you are looking for at a particular time. At certain points of your life, you're going to look at wealth different. When you are young, you are more risk averse. You have more time to make financial mistakes and are most likely going to look for a greater return on investment. You may have more gambling possibilities or mindset that you want to make money fast, money now, and grow wealth as fast as possible. So you'll probably not go into having too much cash in your bank account. You'll probably not buy a house as easily as an older person, and you might put money in where you have the biggest return on investment, and it is okay. And if you are older or have children and are looking to move into an age where you're looking at retirement and thinking about retirement, you're most likely going to look at safety. How safe is my money? How can I be able to have a home that I will not pay rent in old age? How am I going to have this and that and this other thing? The best approach is to think like an old person, but to have the ability to take on risk like a young person, having a diversified approach toward things. In fact, if you do not like the confusion of having to invest on two things at a particular month, you can say this month I'm going to save or invest in a safety asset, maybe buy a house or invest for a house or save some money. Then the following month you put on an investment that has a bigger return on investment. So at the end of the day, these two balance themselves out. If you take too much risk, then you have the possibility of incurring a loss. If you are too safe, you have the possibility of not generating as much wealth as fast as you can. So taking on a balanced approach is usually the best approach to look at money and wealth and growth and creation of wealth. Of course, the other thing that people are attracted to is growth. So you may have return on investment and you may have safety, but there's something else called growth, and this is what propels the average investor into the $1 million max. Growth is what not only gives you some cash flow, not only gives you some safety, but gives you some capital gains. So you also look at capital gains so that whatever you hold is generating three kinds of value: the safety, the return on investment, and the growth potential. That if you sell this asset today, you're going to sell it at a better price than you bought it the day before. And this is where people start looking at investing in businesses, either being your own businessman, investing in assets that have ownership in certain businesses, or looking at certain growth potential investments like forestry. Do you have land? Can you be able to put forests down there? Because not only are you appreciating in value, getting some cash flow from sale of timber and other products within the period that you have investment, not only do you have the safety of having land that is a fixed asset that may not depreciate or lose value, but you also have the growth potential of the timber that you have that is growing, the trees that you have that are producing fruit, and the value that you are generating just holding on to it. So having these three in mind is what can allow you to be able to grow. So having a diversified portfolio when you are starting, and then as you move towards already having set or achieve certain goals that gives you safety and a good return on investment and some cash flow, then you look at growth. How can I be able to look at growth? And people who are looking at wealth in terms of how much can I leave for my dependents, look at the third option, which is growth, the growth potential of these businesses. Because majority of people who start a business will probably not generate as much in terms of gains for themselves as their children will, because businesses grow over time and over a long period of time to generate the much value that they may have. So those three are one of the ways that you can be able to do them. So first, start with the first two. Then once you have acquired a certain level of what is comfortable for you in terms of return on investment, cash flow, and safety, then you can look at growth. That is why you look at businesses you can invest in. That is why you start some businesses, because you have the backing of the two of them. Remember, somebody who invests in a new business and generates money by investment is much more comfortable when they have the safety of having a home, have the safety of having some cash here, have the safety of a return on investment on something that had invested in, so they are not going hungry because they have something they can put in their stomachs, and so can be able to invest something extra towards that business and have the comfort of waiting for it to mature and grow into a profitable and a wonderful business. Hope you're learning, you're growing, and becoming better in your financial affairs. Remember, subscribe to the channel, leave a comment in the comment section, and like this video. Do have a lovely, lovely day.